Welcome to CRE Fast 5. I'm Carly Iacono, and tonight we are talking about net lease car washes. Most likely, this is not a part of the market that you have considered in depth, but it is an emerging and interesting segment that you might want to take a closer look at. Let's jump in. First, as an overview, car washes represented a $15.1 billion industry in North America alone. In 2019, 77% of everyone surveyed said they relied on professional car washes as the primary way to care and clean for their car. This was a dramatic jump up from 1994, when only 48% of respondents said the same. So not only is it a very established market, but it is growing rapidly. Now, from an investment perspective, there are a few interesting considerations. First, it is a recession-proof tenant. Average ticket price is $3 to $10, as most operators are moving away from full service and into that convenience conveyor belt model. So what that does, two things. One, it keeps the price point very low for the consumer, making it a within reach luxury item, if you will, that translates well in good times and in bad. Second, it takes down a lot of those labor costs. So the operator has very low overhead once the improvements are in and can model out their cash flow based on expected number of visits with pretty good accuracy. Second, many car washes were considered essential businesses throughout the pandemic in municipalities in much of the country. So hopefully this will not be a long-term concern or consideration, but for now it is worth noting that they are essential and have been able to operate throughout the pandemic. Third, and really most important thing that I think you should take a look at is the EBITDA coverage. So car washes strive to operate at a 2.0 to a 2.5 times EBITDA coverage ratio. So what this does, it gives you as the investor, and maybe even more importantly, your lender, a lot of comfort in the higher profit margins of these companies. And that kind of counterbalances any perceived credit risk, because most of these tenants, really basically all of them, are not investment grade. So the higher EBITDA coverage ratio allows these deals to be financed and gives you comfort that even though you don't have an investment grade tenant in most cases, you do have a very profitable business model that you're supporting under your net lease. Next thing I would consider is the residual value of the location. By nature of the business, most of these are at signalized intersections and they require high traffic. So that gives you a lot of long-term residual value in your actual underlying real estate. Couple that with the very expensive tenant improvements that are required, and you have what I would call a sticky location, meaning it's very difficult for that tenant to pick up and move at the end of their base term. So they're much more likely, in my opinion, to exercise their options and stay put because of the difficulty finding the location and the expense in the improvements. Last thing I would point out is bonus depreciation. So of course, we are not accountants, confer with your accountant, but car washes in many instances under today's laws allow for very aggressive bonus depreciation. In some cases, they can be depreciated 100% in year one. Now, we don't know how the new administration in 2021 is going to change the depreciation and tax laws. So obviously, definitely speak to your accountant. But the way things stand right now, bonus depreciation is a tremendous benefit for car washes and a few other assets as well. Next, let's move into who the main operators are. I'm going to give you an idea of three of the biggest players. The first and really the leader in the space is International Car Wash Group. International Car Wash Group operates across 14 countries. They have 950 locations. They entered the United States market in 2015 and already have 200 locations. So a very substantial operator. They do operate across 3 different brands, but that is the parent company. Next one I'll mention to you is Monmouth Holdings. They are a 38-unit operator across 5 different states. In 2018, they partnered with Red Dog Equity to help facilitate ground-up construction. So So although they are a much smaller operator, I brought them up because I think this partnership with a private equity company is very interesting. And this is what is really facilitating the net lease structure of car washes. Historically, car washes were sold with the business, and that's why we really didn't see a lot of net lease properties as investments. But once private equity got involved, really just a few years ago, we started seeing more and more of that net lease structure and more investment properties coming to market. The last tenant I'll mention is Mr. Carwash. They operate 300 locations across 21 states. They too have partnered with a private equity company called Leonard Green, which is a noteworthy firm out of Los Angeles. So as more private equity firms enter into this space, I expect that we're going to see longer lease terms, we're going to see more net lease structures, and have larger and larger operators to back our leases. If this is a part of the market you'd like to dive into further, feel free to give me a call. I'm happy to give you more information. That was CRE Fast 5. I'm Carly Iacono. I look forward to seeing you again soon.